I want them all. Now, does having more than one policy really benefit you? I get this question all the time. Like, they think more is better. You know, I was recently asked this question. Is there any benefit to splitting monthly payments between a policy for my wife and a policy for myself? Or is one policy to start with what we can afford monthly better? The age-old question, quality versus quantity. You know, in today's video, what we're gonna do is we're gonna find out the pros and the cons to having multiple policies, and we're gonna figure out which one's better. But first, I need you to hit that little button. Let me make some room here, it's right here. Oh yeah, look at that thing. Hit it, come on, hit it. And while you're after hitting that subscribe, there's a little bell, smash that bell. You know, like Rocky Balboa, you know, little left, 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 and a right hook. That was weak, I know, I need to work on my boxing, but you can probably do better, so try it, smash the bell. All right, let's dive into it. So what's the difference between one or a bunch of different policies? Well, let's first start with why one would want to have multiple whole life insurance policies. Now, there's a lot of reason for that. Some of you might say, well, I want diversification. Okay, maybe we design one policy one way and another one another way. You might say you want diversification of the way you use them, different terms. Maybe you want different policies that can have different ways of using it, different interest rates, different dividend paying histories. You can diversify by companies. Did I confuse you? Good, because that was getting old. There's really only one reason and one telltale reason that will tell you how many policies you should have. And I like to call that the tailored objective. So when we design these policies, to be used with the infinite banking concept, usually we have a specific goal in mind. Multiple policies can be designed to serve different financial needs and goals at different stages of your life. Now, whether it's retirement, purchasing a home, buying a car, or funding your education, we can design a policy that will work for every one of them. But what is the single most important thing right now? So if we're looking at today's needs and goals, you know, let me bring you back to this. When we actually meet with a client, we always ask them their current situation. We always ask them, what is it that we want to solve first? And when we're asking them the questions, we find out, do you have any debts? How many credit cards do you have? You got car loans, home equity lines, all the debt structure. Because the fastest way to build wealth is through your own debts and expenses. Add up all your debts and expenses, write the number down. Yeah, imagine if you wrote that check back to yourself every single month. So doing that would require one policy. And if we designed one policy to pay off all your debt, that's great. But once we pay off all your debts and you're recapturing all that money, guess what? All that new money that you were giving away that's now coming back to you will not fit in that first policy we created for you. But eventually, when you're recapturing all that money, your existing policy that we set up to serve that single solitary goal of debt repayment, you can't fit all that money into it. It's just too much. There are IRS rules that inhibit us from putting any more money than what we initially designed that policy to do. So what happens? Well, all that money that you're recapturing sits in a bank account. And you know what that means? We got to set up branch office number 2. That's right, branch office number 2. You see, when we're building our own private banking system, we got to think like a bank. Now let me ask you, when you drive down the street in your town, how many banks do you pass? There's one on that corner, next block, there's another bank right there, another block over, there's the same bank you just passed a second ago right there, branch office number 2. Every bank has more than one branch. Why? Well, because a similar reason to what we're talking about. They want to have the ability to hold and raise and build more wealth. That's right. Your second branch office is your second policy. And that second policy is set up solely to hold more of your money. Because the first one's maxed out, so we're gonna set up branch office number 2 to take care of that overflow of all that money that you used to give away that now you're recapturing. But that's not the only reason to set up a second and third and fourth and fifth and sixth and seventh and eighth and ninth, 10th, 20th, 30th. Yeah, anyway, you can set up as many as you want. But the only reason to set up policies under this idea is because you want the ability to put more of your capital through your private banking system. But let's go a little bit deeper down the rabbit hole. There's also flexibility. You see, access to larger cash values. More policies mean more accumulated cash value that allows you to tap into more money, create greater liquidity, and take advantage of more opportunities as they come. And then there might be risk management. So when we talk about risk management, we want to minimize the impact of policy changes. So by having multiple policies, one company might change their dividend or might change their loan interest rate. The other company may not. Having multiple policies can mitigate some of the impacts on an overall financial strategy or on your overall private banking system. Then there's also what I think is one of the number one reasons to have multiple policies: estate planning, wealth transfer. You see, multiple policies can be far more effective for estate planning. This allows for easier distribution amongst many beneficiaries and also many purposes. Each policy could be set up for its own estate planning purpose or its own legacy purpose. This gives you a lot more control over where the monies go, how much money is going to pass on to the next generation, and, wait for it, you can actually have some of the policies owned by your trust. Now, I know that's advanced planning, but that is certainly a reason to have multiple policies. But I missed one really important thing that I'd be remiss not to talk about right here. So back up in the beginning, if you remember, the question was about should he do one policy or split the money and put it into two policies, one on him and one on his wife. That would be a really good reason to have two policies. Now, let me give you a real life scenario. Let's say there's a husband and a wife. Both are breadwinners in the family and they've got 3 young children. Now, if one of those two were to graduate and go on to a better place, heaven, what's going to happen? Well, number one, that income goes away from that household. And that other spouse now inherits the burden of the entire family's expenses. Now, that family was used to 2 incomes. Now there's only one. So wouldn't that make sense to make sure that there is a policy on each of them, even if it's the same dollars? Like instead of putting $1,000 to one policy, we split it, we do $500 to each of them. If each of them are breadwinners, this can make sense because now you've got 2 death benefits. Now, I know we don't talk about death benefit a lot, but in this scenario, that's why we're doing it. Because by doing 2 policies, there's going to be an extra policy service fee. So you wouldn't do it because it's more effective to build cash value. You would do it because of protection. Because if one should pass away, that death benefit comes into that household, into that family to help support and stabilize that family's finances. So I think in that scenario, I would have been remiss not to say that yes, both a husband and a wife, if both breadwinners, should both have policies. But a lot of times in a household, there's one spouse that stays home with the kids and the other one works and produces the bread or makes the income for the household. So in that scenario, we would normally recommend that breadwinner, that spouse that's turning the income, is the one that we put the policy on first. There are tax benefits. The death benefit passes on tax-free. But not only that, you can use the money in your cash value tax-free if it's designed properly. The ability to take out tax-free loans against your cash value is unlimited. However much cash value you have, you can borrow that, you can use that. So the more policies you have, the chances of you having more cash value and more death benefit are significantly higher. So the perks of having one policy, well, simplicity, ease of management. One policy is way easier to manage than multiple policies. Trust me, I have 10 and it's a pain in the butt. You only have to worry about one set of premiums, one set of terms, one set of conditions, and one company in some cases. Also, they're slightly lower cost. One policy has one policy service fee. Even though the policy service fee is usually only $50 or $100, that's still a cost savings. If you have multiple policies, you have multiple policy service fees. And you also still have to make those premium deposits, right? So multiple policies means you have more money going into your policies, which is what we call the premium deposits. Fewer fees, additional policies come with additional administrative fees, like I mentioned earlier. So it's more cost effective for some individuals. But then there's the compounding benefit. You see, the more policies you have, the more cash value growth you're gonna have. So whole life policies often have a compounding cash value, which means that the longer you have the policy, the larger the cash value is gonna be. So that's more money you can potentially earn. There's also dividends. Some insurance companies pay higher dividends than others. So if we have multiple policies, you're gonna have multiple company dividends if we diversify the companies that you're buying these policies from, which certainly can benefit you over the long haul. If you only did one policy and that's all you ever did, that policy will perform really well. The older it gets, the more efficient it gets, the more money it makes, the more compounding it has. But as you add more policies throughout your life, as you make more money, you want to save more money, you keep adding. That is what's going to really benefit you the most. And when you use your policy for the infinite banking concept, you're going to be borrowing money from your policy, and you're going to be making recaptured repayments back to the policy. One policy is way simpler to manage. It's way easier to manage loans from 1 versus 2, 3, 4, 5, and you get the drift. Plus, every time you make loans, that money goes to work, and then you got that money coming back. You know, I say all of this with a grain of salt because in our company, we do all that for you. We have a mapping team that literally manages all the loans and all the recaptures. It's called our mapping team for a reason. It's like a GPS in your car. You just type in the destination, you just tell our mapping team what your destination is financially, and we will create the map and help you manage that on a quarterly basis. So, other companies or other policies not done by us, yes, the more you have, the more complicated it's going to be. But with us, our team is designed to help you with all of that. So I don't really say that it becomes more complicated the more policies you have because we have a team to help you do all that for. Then there's financial discipline, which is a big piece of the infinite banking concept because you are creating a forced savings vehicle. A single policy can act as a sort of forced savings because you've got to make your premium deposits. This builds financial discipline. And then as you build financial discipline with one, you can add another and another because that discipline will carry on and help you with your long-term planning. So, all right, folks, we've dove deep into the pros and cons of having one policy versus multiple policies. I even went down rabbit holes, for crying out loud. So from diversifying your investments to keeping things simple, there's only one thing to consider. Can you guess what that is? Take your time. Yeah. When are you going to start your next policy? That's the only thing you should be thinking. So I hope you enjoyed this video. I hope it gives you a little bit more insight as to whether you should have one or multiple policies. And trust me, I have lots of these things, so I know that as you build onto your banking system, it gets more and more complicated, which means you need more and more financial discipline. So if you liked this video, check this video out, how to design an infinite banking policy updated. Thanks for tuning in, but hey, before you go anywhere, click the subscribe button because that's how you help me. And by clicking that subscribe button, you're helping this channel grow. But while you're at it, why don't you hit that little bell up top? Yep, it looks like this, and you can, ow. Holy shit, that's gonna leave a mark. I think the plastic hit me. Anyway, before I pass out, thanks for joining me. We'll see you in the next one.